Welcome to this episode of the GrowingAU show, where we're going over the stock market's winners and losers to help you find the best way to have your money work for you. I'm your host, John Knott, as always, ready to bring you a super value-packed episode today. Thanks for joining us. We're talking about Pepsi. Now, I know that you Coke fans out there are probably going to get kind of upset, but just bear with us. Maybe they're not doing too well and you're going to be happy. Hey, all you Pepsi fans, maybe they're doing better than Coke. We're going to be going all over all of that today, so stay tuned for that, and we're going to have an awesome episode. First thing I want to say, number one, I implore you to go and get professional financial advice before making any financial decisions. This show is for entertainment and research purposes only. That being said, all of the professionally vetted information used in this show can be found in a document that'll be linked below and also over on our website that is a typed up breakdown of every stock review episode that we do. It's going to include important stock information, including SEC filings, 10Q forms, annual reports, quarterly reports, as well as all of the links to any of the articles and experts that we reference in today's episode. With that being said, let's just jump into it and look at Pepsi stock right now. I mean, let's see here. $134.26. That is down $2.11 today. 1.56% down today. It's one interesting day for sure for Pepsi. So we're going to be talking a little bit about why Pepsi is performing that way and just going to be going over everything we need to know. So first thing is first, let's take a look at some of the fast facts about Pepsi. Well, first of all, current stock price is $134.24. Their annual high is $147.20, annual low being $101.42, with a volume of 3.19 million, an average volume of 5.13 million, and a market cap of 188.9 billion. Dividend yields being at $2.84. Also, I think it should be mentioned, Pepsi, you see it? Blue, white, red. I know, pretty good. All right, so let's take a look here at the monthly returns of Pepsi. If we're just going to go here and switch over on the little ticker down there. For the month, Pepsi is up $12.13. That's 9.92%. For the year, Pepsi is up $8.21. That is 6.54%. Pretty good considering the coronavirus outbreak that crashed the stock market in February and through March. And for the last 5 years, they are up $39.17. That is 41.13%. Look, Pepsi's a pretty good stock. Most of the people that you talk to regarding Pepsi are pretty fond of it. But that being said, there are still two camps on the whole Pepsi debate. So let's go ahead and see what the bulls have to say about Pepsi. All right, so here's what the bulls are saying about Pepsi. In still beverages, a category facing fewer secular challenges, particularly in the US, Pepsi is a much more formidable competitor to Coca-Cola. The firm's consolidated beverage and snack distribution operations, combined with its direct store delivery capabilities, allow for better execution in merchandising. Pepsi's global dominance in salty snacks may be underappreciated, with volume shares of more than 10 times that of the next largest competitors. The firm benefits from unparalleled unit economics. What they're referring to here is, this Pepsi, the drinks, right? The soft drinks, but also Pepsi owns 22 other brands. You have Frito-Lay's, Doritos, Mountain Dew, which I know is a soft drink, but another brand there, a whole bunch of different chip brands. Pepsi has a whole bunch of products that'll help Pepsi make up for any losses that they are facing on their soft drinks. But what do the Bears have to say? These guys are the Coca-Cola fans. What are they saying? Well, there's no guarantee that the management's recent manufacturing and system investments will reinvigorate the top line on a sustainable basis. In most beverage categories globally, Pepsi is still a distant number 2 to Coke. I told you they were Coke fans. A corollary of Pepsi's less focused product portfolio is inherently less operating leverage in its business model. So they're saying, Pepsi, they've got a lot of other brands, but it basically means that they are a jack of all trades and master of none, and it's not able to leverage the brand they're most good at. Essentially, they're getting away from their initial and their core of their brand. The Bulls love that, saying that that's going to pad them against all the losses. The Bears say, well, despite those losses, it's essentially allowing them for being in a non-leverageable position as far as their business model is concerned. So really kind of two sides of the camp on that. But despite what the experts are saying, right? Despite what the experts are saying, it is always imperative that we take time and we actually look at the numbers. So this is coming from benzinga.com from Lisa Levin. She's a staff writer. And, oh, hey, Lisa. All right, so PepsiCo reported quarterly earnings of $1.07 per share. That is beating analysis estimates of $1.03 per share. The company's sales come in at $13.88 billion, exceeding the consensus view of $13.21 billion. And again, that is reported by Lisa Levin from Bazinga.com, and also talking about how Pepsi had a very decent first quarter on a monetary earnings and under current pandemic restrictions / environment. So basically, despite everything that happened, Pepsi did all right. A lot of people saying because they have access to so many other types of revenue and profit sources beyond just soft drinks, even though the soft drinks are pretty good. Regarding the future of Pepsi, what are some more experts saying? So, from MarketWatch.com, Ciara Liane, an investing and corporate news editor, talks about that due to this uncertainty, the company's previous financial outlook regarding fiscal year 2020 is no longer applicable. The company is still expecting to return $7.5 billion to shareholders in fiscal year 2020. Not too bad. Split between dividends of $5.5 billion and share buybacks of $2 billion. Shares rose 0.9% pre-market and are down 1.6% in 2020. Essentially what Ciara is saying here is the same thing that Starbucks said in the episode that we talked about them. It's just hard to say what's going to happen because we don't know how long it's going to take for things to get back to normal. We don't know how long this whole recovery process is going to be. So it's really hard to kind of map out any sort of financial planning or financial return map for fiscal year 2020 and possibly even into fiscal year 2021. Just really depends how long it's going to take for the US market and all the markets around the world to get back on their feet. From Reuters.com, Uday Sampath Kumar, who's a columnist, talks about this. He says, the company said it has seen an increase in consumers making breakfast and snacking during the day while stuck under stay-at-home orders. What he means by that is that we're seeing an increase of people buying the other types of products that Pepsi is associated with, and leading to a surge in sales of snacks, oatmeal, and Aunt Jemima pancakes late in the first quarter. Its drink business, however, is not faring super well because, and here's this is interesting, under the tough moves to stifle the virus, the company ditched its full-year forecast and predicted second quarter organic sales would decline at a low single-digit rate. This warning mirrored that of Coca-Cola. So Coca-Cola and Pepsi kind of in the same boat here. Last week, which said that the volumes had fallen 25% globally since the beginning of April, largely stemming from a loss of sales other than that of retail stores. What that's referring to is that Pepsi, Coca-Cola make a lot of their sales through partnerships that are beyond just buying it retail. So that's like, we're talking about large sporting venues, we're talking about movie theaters, we're talking about theme parks, we're talking about basically any large venue where you can get a fountain drink. Pepsi or Coca-Cola, depending on who's partnered with whom, is not getting those sales. Restaurants aren't making as many sales. Movie theaters are closed. Sporting events aren't happening. Theme parks are closed. And Pepsi and Coca-Cola in their soft drink department are making some significant losses in those areas because that's where the main source of revenue for them when it comes to the soft drink is coming from. It's not in the retail stores. That is, of course, what the bulls say is so great about Pepsi's stock and their outlook into the future is that they have all these 22-something other options that allow them to stay afloat even in these hard times. Again, the other side of that is, but it also makes them really diversified, which could be good, but does that allow for control over the business model in the company? From our friends over at the Motley Fool, Fool.com, Adria Cimino, who is an analyst and columnist, Pepsi shares have slipped 2.2% so far this year, dramatically outperforming the rest of the market. As the coronavirus outbreak expanded last month, weighing on companies' supply chains and sales, the S&P 500 plunged into bear market territory. This is something that a lot of us know. We knew that it dropped pretty hard and is down 14% since the start of 2020. That's obviously referring more to the S&P 500. Pepsi's co-president in snacks may have helped it, as we said before, resist steep declines as shoppers stock their shelves with food in the preparations for lockdown. Huge runs to the grocery store. You've probably been to them. I've been to them. People are filing through the aisles. I got yelled at today for walking the wrong way in the grocery store, actually. People are going crazy, buying food like they haven't before. Pepsi being able to leverage that of having all these other brands that they're associated with that are making sales. A lot of people walking through the store with a whole bunch of soda, mainly Pepsi or Coca-Cola, kind of, 50-50 in their shopping carts. So Pepsi making a lot of sales in the retail market, making up a little bit, of course, for their huge losses when it comes to the kind of more commercial, again, large venues where they're losing that money. As a result, PepsiCo's sales may have fared better than sellers of non-essential items during the first quarter. Now, investors may be wondering if the company has what it takes for long-term revenue and share gains. It's hard to say. It's really, really hard to say how Pepsi is going to fare in the long run. After all, we are aware that we don't know how long this market downturn is going to last. Obviously, we're no longer in the 19s. We're up to upwards of almost 25,000 in the Dow Jones. So the markets are getting better. Some people say that the markets will take another dip, and that obviously could affect Pepsi. So it's hard to say how Pepsi is going to do. If we look at Starbucks, for example, as we talked about in the last episode, they think that the worst to come for them is still going to be in quarter 3 and quarter 4. Pepsi reporting that quarter 2 is going to be bad. Could quarter 3 and quarter 4 be bad beyond that? It's hard to say. We're going to have to wait and see. There's a lot that we don't know right now. But the best that we can do, kind of look at the past, look at what the experts are saying, and start to learn more to really find the best place for us to put our money. Because after all, the best way to have your money work for you is to know how your money works. So understanding how all this works, finding more information, doing the research is really beneficial. Pepsi, for a very long time, has been a very well-regarded stock. Looking down at the ticker, let's just take a look at the 5-year pattern. So again, up $39.04 over the last year, relatively decent growth. We do see a drop over here in May 11th of 2018. They were at a low point there at $97.43. March 20th, 2020 at $103.93. How does that compare to their low? With a low of $101.42. So right about March 20th when they hit those low points. But again, not as low as their drop in May 2018. So the support's a little bit different on that end. But Pepsi, it's been long regarded a good stock. And I do believe that Pepsi has the potential to continue to perform well in the future. Whether or not they will, that is to be seen. But we can't time the market. And right now they are headed back up. Again, they did drop from total high of $147.20 back in February. Currently sitting at $134. There still could be a little bit of growth to grab on Pepsi as they continue to rise back to that $147 high point for the year. Let me know. Let me know if you're going to invest in Pepsi. Let me know what you think about them. Are you a Pepsi fan? Are you a Coca-Cola fan? Where do you sit? Comment below. Also, I want to say, are you interested in learning more about the stock market? Are you interested in beginning to ask the right questions, to know what all the different kind of terminology and the numbers and the equations, what it all different means? Well, if you are, there'll be a link down below to our website. When you're on the website, you'll be prompted to sign up for our email list. If you sign up, what you're going to get is you're going to get an 8-page, totally free ebook that is centered around giving you some of the basic information to get started in the stock market. Mostly definitions, some equations, and just kind of explaining and getting you on the right track to start thinking about the different things you want to be looking at, start thinking about the right questions. All of that will be included in our little 8-page ebook that is for free. All you got to do is sign up for the email list over on our website. Also, with the email list, you will get all of our typed up stock breakdowns as soon as they are available. Those will be emailed to you every single time. That'll be on the website. Hope to see you over there at GrowingAU.com. Appreciate everyone listening today. Consider giving us a like and a share if you enjoyed the video. Really appreciate it. Maybe even subscribe. If you're a Pepsi fan or a Coca-Cola fan, comment down below, and we'll see you next time. Thanks, guys.